Welcome to our deep dive into Vivakor Inc., ticker symbol VIVK. In this video, we'll break down the technical analysis for October 15, 2025 and explore what's driving the extreme volatility in this microcap stock. VIVK has captured traders' attention with wild price swings and dramatic volume surges. We'll walk through the recent price action, key technical indicators, and what the future might hold for this distressed equity. Whether you're a trader or just curious about market dynamics, this analysis will help you understand the risks and opportunities in VIVK's current setup. VIVK's recent trading has been nothing short of chaotic. After peaking above 80 cents in July, the stock suffered a catastrophic collapse, hitting an all-time low of 0.1844 on October 13. Then in a stunning reversal, VIVK surged 53.7% on October 15, closing at 0.2887 after reaching an intraday high of 0.3693. Despite this bounce, the overall trend remains sharply bearish, with the stock still down 64% from its July highs. This kind of volatility is typical for distressed microcap stocks, where rapid swings can lure in both risk-takers and short-term traders. Volume tells a powerful story in VIVK's recent collapse and partial recovery. Before late September, average daily volume was under 500,000 shares. But as the stock began to unravel, volume exploded, hitting 37.3 million shares on September 29 and 12.5 million shares at the October 13 low. The October 15 rebound was even more dramatic, with 227 million shares traded, 450 times the pre-collapse average. This surge in volume signals intense speculative interest, but also hints at exhaustion as profit-taking set in during the intraday reversal. Price action on October 15 was a textbook example of a dead cat bounce. After plunging to new lows, VIVK rebounded sharply, only to face heavy selling as the price neared 37 cents. The stock closed at 0.2887, well off its intraday high, suggesting that many traders took profits quickly. This kind of reversal, especially after a steep decline, often signals that the bounce is more about short-term speculation than a true recovery. Without fundamental catalysts, such moves are rarely sustainable. A look at VIVK's moving averages paints a clear picture of ongoing weakness. The current price sits below all major moving averages, confirming the dominant bearish trend. Short-term averages like the 5-day SMA and EMA are just below the price but converging quickly, hinting at short-term momentum. However, medium-term averages around 33 cents and long-term averages near 81 cents remain well above the current price, acting as strong resistance and highlighting the severity of the decline. Technical indicators like the RSI and momentum oscillators provide more insight into VIVK's current state. The 14-day RSI sits at 40.44, which is neutral but just above oversold territory. Williams %RAT suggests lingering bearish pressure, while the money flow index is elevated, showing mixed signals. These readings indicate that while the stock is no longer deeply oversold, there's still significant downward pressure and caution is warranted. Indicators measuring trend strength and volatility confirm the challenging environment for VIVK. The ADX at 33.69 signals a strong downtrend, while the Arun oscillator's extreme negative reading underscores bearish dominance. The ATR, a measure of volatility, is exceptionally high at 0.081, reflecting the wild price swings typical of distressed stocks. These metrics suggest that traders should brace for continued turbulence and wide intraday ranges. Momentum oscillators like the MACD and stochastic provide further clues. The MACD remains negative, but a slight bullish divergence in the histogram hints at short-term buying interest. Stochastic readings are deeply oversold, but there's no clear reversal signal yet. This combination suggests that while some traders are betting on a bounce, the overall momentum remains weak and the risk of further downside persists. Volume-based indicators reinforce the bearish outlook. The Chaikin oscillator is deeply negative, signaling persistent distribution as sellers dominate. On-balance volume, however, reflects the recent surge in trading activity. This divergence highlights the speculative nature of the recent rally and suggests that any further gains will need to be supported by sustained high-volume buying. Additional technical metrics round out the picture. The commodity channel index is at -34.36, indicating a neutral stance, while the rate of change at -21.76% confirms severe short-term weakness. These indicators, combined with the others, reinforce the view that VIVK remains under heavy selling pressure, despite the occasional sharp bounce. Linear regression analysis of VIVK's price action reveals a statistically significant downtrend. The negative slope of -0.013 and a high R2 of 0.8407 confirm the reliability of the bearish trajectory. The current price is about 12.86% above the regression predicted value, suggesting the recent bounce has moved the stock slightly above its statistical equilibrium, but not enough to challenge the dominant downtrend. Looking ahead to the next trading day, the forecast is for a gap-down opening. After such a dramatic surge and heavy profit-taking, VIVK is likely to open between 25 cents and 26 cents, about 10–13% below the previous close. However, if speculative momentum returns, early buying could push the price back toward 28 cents. Expect a volatile open with direction determined by pre-market order flow and broader sentiment toward microcap stock. Key resistance levels for VIVK include 30 cents, which is a psychological barrier, 33 cents the 20-day SMA, 37 cents October 15 high, and 42 cents gap fill. The current price is just below immediate resistance, and any move above 30 cents could trigger short covering and a push toward higher levels. However, these resistance points are likely to be tough to break without significant news or a strong shift in sentiment. The downside support levels to watch are 25 cents psychological, 22 cents $50 percent retracement, 20 cents critical support, and 18 cents all-time low. The current price is 13.4% above immediate support, but a breach below 25 cents could accelerate selling toward 20 cents or even lower. These levels are crucial for traders looking to manage risk in such a volatile environment. Using the average true range ATR, we can estimate potential intraday highs and lows. With ATR at 0.081, the projected high is 0.3697, and the projected low is 0.2077. However, given the extreme volatility, a wider range between 22 cents and 35 cents is more realistic. This means traders should be prepared for 20–30% swings within a single session. Most likely scenario with a 60% probability is that the recent bounce fades. If the price fails at the 30 cents resistance, profit taking could drive it down toward 25 cents or even 22 cents. Volume is expected to remain elevated as speculative traders exit their positions, leading to further volatility and potential downside. There's a 25% chance that strong buying pushes VIVK above 30 cents, sparking a continuation rally toward 37 cents or even 42 cents. This scenario would likely require exceptional news or a short squeeze to materialize. Without a fundamental catalyst, however, such rallies are often short-lived and prone to sharp reversals. In the least likely scenario with a 15% probability, VIVK trades sideways in the $0.25–0.30 range as speculative interest stabilizes. Volume would gradually decline, signaling that traders are waiting for clearer direction. This base building phase could set the stage for a more sustainable move, but only if new catalysts emerge. Given the current technical setup, the risk-reward profile for VIVK is unfavorable for long positions. The lack of fundamental catalysts combined with persistent bearish technicals and extreme volatility means that rallies are best viewed as selling opportunities. Only a sustained move above 35 cents on high volume would suggest a shift in trend. For investors, VIVK's speculative nature and high probability of returning to the $0.18–0.20 range make it a stock to avoid. The technical structure suggests further downside is likely unless there are significant fundamental improvements and a period of extended base building. Patience and caution are essential in such high-risk environments. Sum up, VIVK remains in a severe downtrend despite the recent bounce. All technical indicators confirm persistent bearish pressure, and the October 15 surge appears to be a classic dead cat bounce. While short-term oversold conditions may support further consolidation, the dominant trend is still downward. Traders should approach with caution, and investors are best served by staying on the sidelines until the technical and fundamental picture improves.